Down goes the stock market, guys. It's currently about 3:40 p.m. on the East Coast, and we have the Russell barely at break even. It's up a little bit, but other than that, we have the NASDAQ down 0.25%. We have the S&P and the Dow each down about 0.5%, and we have the VIX down a little bit as the metals are getting destroyed. Silver's down 2%, and we have gold down about 0.5%. So let's just dive into it. Once the minutes came out, guys, the Fed minutes, ever since that point, well, the markets have been getting destroyed, as you guys can see here. And as of now on the intraday chart, you guys can see it. SPY took out the lows from earlier, which earlier we took out the lows from yesterday, and I believe from the previous trading day as well. So it's clear to me that the bears have a grip on these markets right now. You guys can see it on the 5-day chart and maybe on the 10-day. Let's pull it up. Yeah, on the 10-day as well. We've been downtrending pretty much all of this month of February. I mean, maybe in the beginning of the month we had a couple good days, but we've been downtrending for the majority of this month on SPY, on Triple Q, and you guys know that's after we had a crazy month of January. So to be honest, it doesn't really surprise me that the markets are taking a beating right now, and you guys can see here on the intraday, Triple Q is pretty much at that intraday low as well. I mean, it doesn't surprise me that they're taking a beating because of how good January was. I mean, that was not sustainable at all. It might have been, I don't know if it was the best January ever. It might have been, for all we know. I have to go double check the statistics on that, but it had to have been one of the best months ever for January. I mean, Triple Q went up a whopping 18% almost on the month, right in that ballpark. SPY went up about 10%. So at this point, guys, we're starting to break under some key levels, especially on SPY and Triple Q. Triple Q is almost under a key level. We'll take a look at that in a second. You guys can see on the 5-day, again, we're at an intraday low right now at 397. We took the lows out from earlier and from yesterday, and we're under 400 at 398, which you guys know that's a big level of support. So in my eyes, guys, SPY, clearly we have that head and shoulders playing out. Now we're seeing a huge dump under 398. We're going to see some more downside on this thing, maybe down to 390 to 392, right? That was the low from roughly the end of January right here. You guys see that? If that were to break 387 to 388, that's where this could be going. So markets are starting to break down. I mean, they have been breaking down, but now they're really starting to gain momentum after the Fed minutes, which really, guys, nothing crazy came out of that. You know, we're going to get more rate hikes. We kind of already knew that. Not many Fed FOMC members are in favor of a half a percentage point hike, but we might get that. Who knows? I mean, if inflation comes in hot again next month and the month after that, kind of like what we saw in the previous CPI report, you know, you guys know the FOMC is data dependent. If it comes in hotter, that could easily, you know, most of them could be in favor for the 50 basis point hike, right? You guys know what I mean. So this could really, switch the Fed's opinion in terms of, again, the inflation, the CPI coming out, and the markets. I don't want to say they're completely spooked, but they're like, oh, okay, maybe we're going to get more hikes than expected. You know, maybe we're going to see, a couple quarter, 25 basis point hikes. Maybe we do get that 50 basis point hike, right? So the markets are starting to, maybe price that in a little bit. And SPY, again, has some more work, on the downside, 394, 392, maybe 387 is where it could be going. Triple Q, if I pull that up, let me show you guys this. It is starting to peak under the 180 SMA on the 4-hour chart, and it doesn't take a rocket scientist to tell you this, guys, that we do have a bit of a head and shoulder starting to form. And if this starts to fall under, 290, we get a little spike, then we start to fall down again, that's going to be the right shoulder that is going to be completing or forming, whatever you want to call it. That's what I'm seeing at least. So my alert is at 290, guys. We'll see what happens at that point later today. Well, we only have 20 minutes left today, but we'll see what happens at that point, later on this week. It does not look pretty. It does not look pretty right now as, the bears are clearly gaining a grip on these markets, especially throughout the month of February thus far. After that awesome month that we saw in January. So what do you guys think? Let me know your thoughts in the comments down below. And by the way, if you haven't hit that like button yet, make sure to hit that like button. Feel free to subscribe as well. I appreciate you guys as always. And don't forget to get up to 15 stocks from Moomoo. It's free money. If you guys, if you guys don't want free money, maybe don't get your free stocks from Moomoo. But if you want some free money, up to 15 stocks from Moomoo, each up to $2,000, linked right down below. And now let's continue on with the video. So after the bell today, guys, which we're going to, break down these stocks more after the bell in my next video. So make sure you guys, again, hit that subscribe button. But after the bell today, we have a couple companies that are reporting earnings. Let's run through these very quickly. I'll show you guys. We have NVIDIA reporting today, which is a big one, the most important one, at least that I'm looking at. They're reporting after the bell today. And this stock is actually selling off a good amount heading into this earnings report. We have a double top here that pretty much played out. The double top followed by the dump. You guys see that, right? Double top. Now we're down a good $25 from that recent high, which in percentage terms, that is roughly 10%. So NVIDIA is in a correction. It's in correction territory here heading into these earnings. And if they disappoint, we could have some more downside to go. This might not be done. The selling might not be done on this thing, as we do have, a good $10-15 to go until it gets down to a big support, which is right by the 180 SMA here on the 4-hour chart at about 190. And 190 was the high from the middle of December and from back in August, right? So that could be where this goes. We'll see. Again, we'll talk about, more, we'll talk about these companies more after the bell when the earnings actually come out. We also have Lucid, which is a company that you guys may or may not know. They make a very expensive electric vehicle, very luxury, guys. It's not for the masses, not even close. Maybe at some point in the future they'll make a cheaper model. Who the heck knows? But they're reporting after the bell. I'm going to be watching them. We also have Etsy after the bell today, guys, which is up a good 3%. So maybe investors are getting a little antsy. They're getting a little excited here before the earnings. So it looks like here the trend is holding heading into the report, and we'll see if we officially do get that bounce. We're not fully getting it yet, but we are, again, seeing a little bit of buying pressure coming in here. It's up about 3% right now. We also have Dutch Bros, which is one that I'm going to be watching. They're after the bell today. Coffee company, coffee chain, whatever you want to call it. Also, we have Teladoc. TDOC is the ticker. Kathy Wood's favorite stock, probably. I don't know why it's her favorite stock, but there's a lot of things that I question. There's a lot of things that Kathy Wood does and says that I question, and I'm sure a lot of you guys are on the same page as well. So we have Teladoc after the bell today. We have Sunrun as well, which you guys see a clear descending triangle on this thing. If these earnings bomb, we could be setting up for a dump, especially if it breaks on our 22-23. So be careful here with Sunrun, guys. And we also have good old TJX, which this chart does not look good. Actually, wait, they already reported earnings. Let me see what they did. They might have been in the morning. Yeah, they did. That's right. 89 cents EPS. We might as well take a look now. 89 cents EPS, which came in line with the estimate on revenue of $14.52 billion, which beat the $14.06 billion estimated. Not bad. They see full year adjusted EPS of $3.39 to $3.51. All right. Q4 U.S. comparable store sales, they rose 4% for the quarter, and they see full year 24 pre-tax profit margin between 10.1 and 10.3%. All right. Let's see if we have anything else here. Not really seeing anything else. But yeah. Looks like revenue beat expectations, and the stock is still down about 2%. So I feel like there could be some more work on the downside for TJX. We could be coming down, especially now that we took out the lows from last week, a couple weeks ago, which those lows were at about 78.50. The fact that we broke those lows, we're also below. We're honestly at a multi-month low. You guys see that? So there could be more downside. Probably low mid 70s is where it could be going. We could fill that gap down to here. Maybe from that point, we fill the gap down to $68. We shall see, guys. That'd be a more attractive spot, at least in my opinion, on TJX, anywhere between 68 to about $73. We'll see how it goes. So that's pretty much it, guys. Those are a couple stocks here that I'm looking at as we are wrapping up the day today. And as you know, we're going to see we're going to see some earnings coming up. So with that being said, if you enjoyed the video, make sure to smash that like button. Let me know your thoughts down below in the comments, and don't forget to get up to 15 stocks from Moomoo and up to 12 stocks from Webull. And if you guys want to check out the Patreon and join that, all of those are down below. I'll catch you guys in the next video. Thanks for watching as always. Peace out.